Welcome back to my channel. In this video, I wanted to cover Elevance Health. They announced their earnings today, and overall, I thought their earnings were really good. They're growing their business by 14%. They expanded their profitability and increased their cash flow. They bought back shares. In another industry, let's say technology, boy, this stock would be up 20%. But it's healthcare, so we're going to have to be patient in healthcare because the market's just not buying healthcare companies. So let's take a look at their financials and see what we've got with Elevance Health. So overall, again, the earnings looked really good. They are toning down expectations because the space is trying to deal with the change in the big bill. I think it took away a lot of services from people that receive Medi-Cal and also the Affordable Care Act recipients. I think some services or at least some benefits were taken from that population. So they're trying to deal with that. I think they're going to deal with it just fine. These guys are really good at adjusting and seeing how they need to become more efficient. Elevance stock is trading a little lower in the pre-market. The market didn't like the forward guidance that they provided that they need to evaluate how the big bill is going to change the reimbursement rates for the insurance companies. Over the last 5 years, this stock hasn't gotten it done. It's only up 29%. You get about a 2% dividend. Over the 1 year, it's down 35%. And year to date, it's down 6.6%. So the healthcare space is really beaten down. Analysts think it's a strong buy, and I'll show you what they think. They think it's highly discounted because the fundamentals are just there with this company. It's only a $77.85 billion market cap company. Revenue is $189 billion. So you're just paying a fraction of revenue for the company. PE is really low at 14.7 and forward P is 9.84. The dividend is at 2%. And these health insurance payers typically don't pay high dividends. They pay low dividends. But the stock price has come down, making the dividend rate a little higher. The growth is where I'm impressed. They grew 14% in the latest quarter. They're accelerating their growth. That's a very good sign. And I think that Elevance Health is getting it done from a business perspective, and their fundamentals look great. So I was really impressed with that and think that the company is very well operated and it's a strong company. They create cash flow. These health insurance payers, the reason when times are good, they makes their valuations are so high is their free cash flows. Even though it's a low rate, their revenue is so high, they just produce a lot of cash. Upwards of, it's expected these guys are going to produce well over 65 or $6.5 billion of free cash flow this year. When we look at what analysts are saying, there's 14 analysts that cover this stock. Very well-known space. The worst case scenario is that the stock will rise to $400 a share. The best case scenario is a $615 stock. So everybody thinks it's discounted. Not one analyst thinks it's priced too high. I agree with them, and I'll show you my analysis later. As we look at the future, they're going to keep growing. So this stock is going to keep growing. Earnings per share is going to keep expanding. They're going to make more money. And their PE, if their stock price doesn't move up, is going to keep dropping. Now, the big boom in technology isn't going to last forever. And when investors want to take some gains out of tech and growth and put them into a safer category, let's say healthcare, I think these stocks are going to start to move up. It's going to take some patience, but the fundamentals are definitely here with Elevance. They're showing great fundamentals. So let's go over desirability. Elevance, in my opinion, is moderately desirable. I don't think they have a super strong moat. Other companies can sell health insurance, and they're competitive with Elevance. The biggest in the space is United Healthcare. So they don't have like exclusive rights to sell into a market, but they are very good at growing their business and creating cash flow. So I put them in the gray, and a company in the gray, I want a good, solid, compelling discount. I'm taking a business that isn't going to be inherently valuable, and I want a discount so that I can make a nice return in the future. And that's what I'm going to look for when I value the company. So I've done my own valuation on Elevance, and I believe the stock is discounted by 52%. The value of these cash flows is just really high, 54% higher than their current stock price when I run a discounted free cash flow analysis and discount those cash flows to today's value. And when I look at earnings per share, just giving them a reasonable PE for a growing business at 14%, I get a 48% discount. So I agree with the analyst. I'm right on the button where they believe the stock ought to be priced. So overall, a 52% discount is very compelling. This is a buy in my book. This is a value investor's recipe for success long term. You have to be patient, but if you look at how Warren Buffett's made his money, is he buys when everybody hates a company, everybody hates an industry, and he buys at those times. And then when the market swings back in the favor of healthcare, this stock's going to be worth a lot, but it's going to take some patience. So that's where I'm coming from. I'm going to keep buying into healthcare. I think it's a terrific space. I'm making a lot of money on technology, communication services, crypto, financial services, but the party's not going to last forever in those sectors. And when the party stops, I think I want the pendulum to swing back and I want to be ready to collect a lot of profits on healthcare stocks. If you're a long-term investor that manages his or her own portfolio and you like content like this where we dive deep into stocks to try to see what companies are worth and what investments are really good to make over the long haul, I encourage you to become a member of this channel. It's easy. You go to the home page, you click the join button, and you'll be presented with three options. If one of these options is a good option for you, it'd be great to have you. You can join member calls on live streams. You can put in tickers that I can review. And I most definitely am very receptive to member requests as well as comments and questions. You get access to my research. You get a lot of other perks. Take a look. It'd be great to have you as a member. Thanks for watching my video and good luck with your investments.